everyone, and welcome to episode 86 of the Rewarding Property Decisions podcast. So buying a property for everyone, it's likely to be one of the biggest decisions of your life, and it's going to be a fairly stressful time. We've spoken about that plenty of times, but it's something that a large percentage of the population will go through because it's a key objective for a lot of Australians. It's quite an uncomfortable process going through that buying side of things. But that's hard enough when it's a home and you're really emotionally invested. But when it comes to a financial decision, so from an investment property point of view, the stress can go up and even further because you're investing in trying to set yourself up for financial independence going forward. But there are many reasons why a lot of people find it really difficult, and the barriers get put up and they find it really hard to get around that. And it's for a number of different reasons, and I wanted to have a chat about those today. The first one that we typically find is more from a mindset perspective. So they're understanding what these actual issues are, and they are typically more mindset type issues. So perceptions that you may have of the market or a lack of perhaps understanding of what might be happening in the marketplace. The second one is actual barriers. So things that may make it impossible or make it difficult at the time, or reasons why perhaps you should not invest in property at that point in time. But it might be things that down the track you can work your way around and still be able to do what you would like to. So what I wanted to do today was work through both those scenarios, look at the things that can make it difficult to buy, but then also have a discussion around some of the options that you can consider to trying to work through those difficulties to still potentially buy, or perhaps give you the understanding that now might not be the right time to buy an investment property. So let's look firstly at mindset, or the perceived issues that may prevent you. And humans by nature, we are a little bit like sheep, particularly when it comes to investing. We like to follow others. We like to see that there's a proven track record and that things have been going well in that area. The problem with that is once we do see that, and once we see that things are going well in that area, then particularly when it comes to property, the mindset then becomes, has it gone too far? Is it now becoming unaffordable? Is it now beyond my reach? And perhaps I should look at something else. Now, I've spoken about this in the past. I did a podcast, I think it was last year, on what's called FOBO, so fear of better options. So that's where people start to look at the market and other factors, which we'll have a look at now, and think perhaps there's something better for me around. And this can be one of the significant mindset issues that first investors really face. And the thing that really probably makes it difficult is that they start to look at trying to find the perfect property. And we've spoken about that plenty of times on the podcast. It doesn't exist. And you really need to get to an understanding of that you're not going to get the perfect property. And quite often when people do suffer from FOBO, they'll quite often start to look back at previous properties and I should have bought that one. I could have bought that one. What would have happened if I did buy that one? And rather than looking forward at what the future opportunities may present, they keep looking in the rearview mirror and what I could have done. And it means that you start to miss out on what could be some really good opportunities going forward, and give you the opportunity to get into the market and have it start working for you rather than working against you. They fail to understand that perhaps some of those properties that they're trying to get towards and that they're really reaching for perhaps are unattainable for a reason. Perhaps they are out of the budget and that's something else that you should look for. Other things that people suffering from FOBO can really find difficult is that they'll constantly be looking at market conditions and what might be better down the track. So it may be that perhaps if you're looking in winter, or I'll wait till the spring because the market will be better supplied. Or at the moment, it might be, I'll wait till next year when perhaps there won't be as much competition around, and I'll before they start to cut interest rates, I'll get into the market then. And it's always looking at something else, and maybe there'll be less competition around, and thinking that things will be better down the track, so I'll keep postponing it. And that can really be to your detriment, because once you have the confidence, there'll be something else. There's always going to be a reason from a market perspective not to buy. And you need to be able to move with that and focus more on yourself and making sure that it's the right time for you, which we'll get to in a minute. So some of the things that you can do to avoid letting FOBO take hold is that understanding, as I said before, that no property is going to be perfect. Nothing's going to be a 10 out of 10. No market conditions are going to be perfect. and you need to make friends with that. So once you've done that, it makes it easier to commit to the process. And it sometimes can help to make a bit of a list so that you can tick those off. And once you've ticked those elements off, then you feel comfortable with buying property. So you could start with having some non-negotiables, and then you might think of things that would be preferable elements to the property. Then it can be things that we would really like to have, but we don't have to have them. And once you've gotten through this list, when it comes to identifying a property and making a decision, you can feel a lot more comfortable with it. The thing to really keep in mind, particularly when you're buying an investment property, is that you're focusing more on the attributes that are going to drive capital growth and make the property a good investment, not what you would want to live in yourself or what you would prefer to have or you think your kids might like. Focus more on those key objectives to achieve the growth that you're looking for. And if you can make sure you distinguish that, it'll make the decision making a lot easier. Now, another element that comes into mindset and is around legislation. Now, I don't mean legislation that might prevent you from buying. I mean legislation that could impact on owning an investment property. And we've seen that come into play a lot at different stages and in different forms over previous years. And particularly from a first-time investor, it can be very, very intimidating and quite confusing, particularly when you start to see some pretty significant media headlines. And they always take the extremes, whether it's a really positive extreme or whether it's a significant negative. That's what's going to sell, and that's what's going to attract clicks online or readership in a newspaper. And so that's what they're going to really go for, particularly with headlines. And so it can make it really hard to get a clear picture as to what's going on and how it may actually impact you. And some of the things that we've seen over the years, just to give some examples, and the most recent one has been the increases that have come into play earlier this year on land tax. And so for those that don't know, what's happened there is that the land tax threshold, which was $300,000 land value, has now been reduced down to $50,000. So it's now incorporating a much higher number of properties that are now applicable to land tax. So there's a lot more that have to take it into account. And so if you were looking at buying more of an entry-level property, perhaps in the past it may not have been subject to land tax, it now most likely will be with those thresholds. But you can factor that in and take that into account. Another one has always been around negative gearing, and there's been discussions at different stages about removing the option to negative gear properties, and there's been other discussions around amending it. So there's been different governments have had different ideas around this. When it's come to amending it, it's been in different forms. Some have looked at, the most recent one was to only make negative gearing available to those that bought brand new property. So the idea there was to try and to encourage more construction to increase the supply as well. The other alternative was to potentially only make negative gearing available to the first or the second investment property that someone owned, and any beyond that weren't entitled to negative gearing. Now, none of those have come into play at this point in time, but they were some of the suggestions. There's been suggestions to amend how capital gains tax is calculated and when it's applicable. There was concerns back around the early 2000s when the GST came into play that was going to have an impact, and whether or not that would be something that might impact on property prices. And then another one has been, which has come into play a couple of times over the past 5 years, there's another amendment coming in next year, is around the Residential Tenancies Act and the requirements for landlords, investors to maintain properties at a certain standard and make sure they include certain elements, like the new one is air conditioning, draft proofing, that sort of thing. So the concern obviously is around costings and whether or not a property is going to be more expensive to look after in order to make sure that it complies with the requirements. So there are things that you can do though. So and don't let these things get overawed, and don't let these overtake the decision or the objective of what you're looking to do, because you can look at these as positives. So the really important thing to do when you are concerned about this is to seek professional advice and do your research, and make sure you understand how it will directly impact. There can be opportunities to take what others may perceive as a negative and turn it into a positive. To make sure it works for you. So I'll give you some examples of this. The increased land tax, you can make your adjustments to that and make sure that it still works in. And understand that just because it's going to be an extra cost on top. There are other ways that you might be able to get in. So because there's been a lot of investors this year that have sold properties because they're concerned about that, is there an opportunity to buy a property at below market value or below what it should be at, and therefore you can make up land tax that you'll be paying for a number of years to come just by buying the right property in the right market conditions at the right price, and then have it work for you going forward. Also taking into account that interest rates are likely to drop at some stage over the next 12 months. So there's going to be potentially extra funds available that you may have had to allow for that can be put towards that too. Another one is the changes that I just mentioned to the Residential Tenancies Act. Now, if you buy a property that's already compliant with the things that have changed and making sure that it's been upgraded, I don't mean fully renovated, but just upgraded, then you don't necessarily have to take those things into account. Also, if you look at it the right way, you could see it as being able to add value. So I don't just mean doing the little bits and pieces, but if it's a significant upgrade and more cosmetic side of things rather than significant structural changes, but a significant cosmetic upgrade, if done right and the right property selected, particularly at the moment when unrenovated properties are not doing as well in the marketplace because people are cautious around dealing with trades, there could be opportunities to get in, do a significant renovation, make sure it's compliant, add significant value to the property, increase your rental return, and all of a sudden you're in a much stronger position. So it can be seen as a positive as opposed to just focusing on the negative side of things and making it work for you rather than against you. So it's really important to understand what's going on and making sure that it's not just the fear that's driving your decisions, that you really understand how it's going to directly impact, and then see if you can actually make it work for you. Now let's have a look at some of the actual barriers. So rather than the mindset or the perceived issues, let's look at actual barriers that could prevent you from buying or ways that you might be able to work around them. And they can be quite difficult, again, for first-time investors. And it's not just a mindset thing, but they need to be worked through. So first one is perhaps buying, or these are things that you need to factor in when you're looking at costings of buying a property. So you might be focused more at the time on perhaps buying a home, or you've bought a home and you need to renovate it. So the extra funds that you've got available to you, you may be looking to put more towards that. So that's understandable too. You might be getting married, you might be looking to have children. These are all extra costs that might prevent you from buying an investment property, putting excess cash that you've got towards that, because you've got other costs that are coming up. Could be school fees, depending upon your stage of life. You could be changing jobs or having a career change. Or there might be other things that prevent you from being able to have finance approved at that point in time to be able to buy that property. So these are all things that can be worked through. And I think a lot of these life factors need to be considered, but there are ways to work around them. So you need to prioritize what's important to you. And it doesn't necessarily mean that an investment property is important at that stage of life, but perhaps down the track, once you get it all laid out, it could be an option for you. And what stage of life are you at? And I always think that the home is a priority. So you want to get that nailed down. And once you've got that nailed, then start focusing more on the investment property side of things. But there can be benefits too. There can be positive things that can impact on actual decision making. So things like you could be getting a job promotion, which frees up extra funds because you may have a wage increase. And so that might be able to be put towards buying an investment. Or perhaps you're getting some form of inheritance that's coming through. And then again, that could be used to put down a deposit. And if you've got the extra cash to funnel towards that, then you can use that to work to your benefit. So I think the key elements around these actual issues and these actual barriers that need to be worked around, I really think seeking professional advice, particularly financial advice around these elements, is a real key. It helps you to understand your capabilities and understand what you can and can't do. And I think working with the financial planner will enable most people to do that, because you really don't necessarily know what you may be able to do. And a financial planner can lay that out for you, show you where you can improve on your financial circumstances, and give you the clear understanding that, hey, I might actually be able to do this, and it may be easier than I perhaps thought it was going to be. But it may not just be about the timing. It may be about other factors too. So maybe with having children, it might mean that for 2 or 3 years we might need to put things on hold. But there's a good window there where we could get into the investment property market before perhaps we do need to start looking at school fees or other expenses that might come with having children. So I just think that it's really important to make sure that it's more about your personal circumstances and how you're working, as opposed to just focusing on those perceived issues, and making sure that the timing is right for you. So getting advice, laying out a clear plan, working through the timing, and then it'll give you a really good opportunity to get into the market at the right time for you. So I just want to have a quick chat about a story for today. And I really could have any number of these. I've had plenty of clients come over the years, sit down, and then perhaps timing hasn't been quite right for them, and they've come back at different stages for differing reasons. And quite often it's for legitimate reasons that the timing isn't right, but for others, they perhaps let other things get in the way, and they've regretted that going forward. So I did have a client come to me in my early days of starting with Wakeland Property Advisory, wanting to buy a house as an investment. We went through the whole process. We spoke about why and what to buy, which they were quite comfortable with that type of property. So we were looking at cottages in the inner northern and northwestern suburbs. And at that point in time, I think we could buy something for around $700,000 or $800,000. And that was in good condition. It wasn't something that needed to be upgraded. It was very, very rentable and very easy to look after going forward. They decided at that point in time that it wasn't quite the right time for them. But eventually came back and sat down with me again I think it was about 5 or 6 years later, and decided that no, they'd made the mistake. At that point in time, the same type of property was probably worth around the 1 to 1.1 type mark. But we managed to secure them something very good value at the time for just under $1 million. So that was a great help to them. And now that property is worth in the vicinity of 1.3 to 1.4 mil. So it shows you that compounding capital growth effect is really important. And the longer you hold these properties, that compounding growth can really drive things forward. And the dollar value, the longer you hold them, the greater the compounding effect. So it's really important to get in as soon as works for you, because then that starts working for you and starts building on it. So hopefully you found that very that helpful today, and hopefully that's clarified a few things around the barriers and the things that can prevent you from buying an investment property, but perhaps shouldn't, or ways that you can get around it. So thanks anyway for joining me for episode 86 of the Rewarding Property Decisions podcast. As always, please feel free to share the podcast far and wide with friends, family, colleagues, and anyone else who may have an interest in property. Otherwise, if you'd like further property information, please visit our website, wakeland.com.au. Otherwise, we wish you all the best with your investment decisions.